Even though you have not paid interest, we will consider. That is in taxation, whether you have paid or not. Even though it is a current year, paid or due, both we should consider. All two we consider as let out property. Now 25,200 we got, this is a lesser value. Along with that, what happens? We have to compare your actual rent received. What is the actual rent? Annual value as per municipal assessment. Hello everyone, this is your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the session 10 of your topic called Income from House Property. Almost we are end of your topic called Income from House Property. Every problem since last 2 or 3 sessions, we are learning new concepts so that I don't want to miss out even a single concept from any problem. In your examination, you must be very much comfortable while doing this particular chapter, and this chapter may come for 10 mark, exactly sure question it is, so that you should not miss out even 1 mark from this topic. Now, the agenda is, as you know, that we will work out one problem on house property. So the time will be very less. So hardly it is 20 to 25 minutes class, but you have to concentrate. Once if you concentrate for these 20 minutes class, so that you need not to work out again and again. The same thing will be followed every problem. Now, these are the informations you have. Find the taxable income of Mr. Rahman from house property for the assessment year 2020 as well as 2021. You have particular, you have house 1 and house 2. We have 2 houses here. All 2 we consider as let out property. Now, out of these 3, annual value as per municipal assessment. You know that this value we call it as municipal value. Along with that, reasonable expected rent. What is reasonable expected rent? We call it as fair value. Reasonable expected rent is called as fair value. Along with that, we have rent actually received. This, you know, that actual rent received, and we have standard rent also. These are the informations we have. Along with this, date of completion of construction, local taxes paid during the previous year, and earlier previous year, current year. Local taxes paid means municipal tax paid. Earlier year and current year, both we will add and we will take. Municipal tax, maybe it is 10 years back one due. Now you have paid. Whatever paid for the current year along with your previous year due, it has to be taken as municipal tax paid. But the rule or condition is it must be paid by owner. If it is paid by tenant, we will not consider. Now, they have not given any additional information, means this is paid by owner itself. Now, insurance premium, we will not take. Rent of land paid, we will not take. Land revenue outstanding, we will not take. In the house property, it is very small one. Whatever the information as I told you, like interest part as well as your 30% deduction and municipal tax. Other than these 3, we will not deduct anything. Any interest of previous year, not even previous year, preceding previous year, the old one, we will not consider. Only interest for the current previous year only we will consider. Then, interest paid on loan on construction, earlier years we will not consider. As I told you, earlier years we will not consider. Interest on due amount of earlier years we will not consider. Previous year, yes, we will consider. Even though it is outstanding, we will consider. Even though you have not paid interest, we will consider. That is in taxation, whether you have paid or not. If previous year interest is due, then you have to consider for your tax purpose. Clear? Yes. This is all your calculation. I'll go for the answer directly. Now, so what is your calculation? I'll write it as computation computation of income from house property for the assessment year 2020 and 2021. For the assessment year 2020 as well as 21. Now, along with this, we have like fair rent or municipal value. So we'll check whichever is higher. Whichever is higher. Now I'll go back to your answer. Your fair rent is how much? Your reasonable rent itself, we call it as fair rent. 26,640. Now, 26,640. What is your municipal value? We'll check. Your municipal value, it is given. Yes, it is 18,000. Whichever is higher, the higher will be 26,640. So higher value. Along with that, we compare your standard rent. So what is your standard rent in this? We have standard rent of 25,200. What is your standard rent? 25,200. We'll compare now. 25,200. Out of this, whichever is less. So out of this, whichever is less, we will get 25,200 as less. 25,200 we got. There is a lesser value. 25,200 we got. There is a lesser value. Along with that, what happens? We have to compare your actual rent received. What is the actual rent? I'll go for actual rent. Whichever is what? Whichever is higher. So we'll compare now. Your actual rent received. Yes. Actual rent received is 28,800. Now, 28,800. We'll go for the higher of the above. Your answer is 28,800. This is your net annual value. Clear? Any doubt up to this? No. So, sorry, this is not net annual value. This will be your gross annual value. Now, from this, we are supposed to minus municipal tax. Less municipal tax. How much is your municipal tax? Your municipal tax as per this, local tax per se. Earlier year, current year, this is only your municipal tax. Add both. All together, you will get around 10,800. 7 plus 3, 10. 600 plus 200, it is 800. Now, 10,800. So, how much you will get? 18,000 is your net annual value. Hope you understood. 28,800 is the higher value. From that, you minus 10,800. Total of both municipal tax, you will get 18,000. I'll come for house 2. Later we'll go for next slide. Now, your house 2 I have. What is your fair rent? Fair rent is 34,560. 34,560. What is your municipal value here? Your municipal value as per this 36,000. 36. Whichever is higher, 36,000 is the higher value. Hope you are clear. Now, once you got your 36,000, we have to compare your standard rent also. What is your standard rent? You got your standard rent 32,400. 32,400. How much you will get? You will get the lesser of the above, 32,400. Out of 36 and 32, which is less? 32,400 is a less. Compare with your actual rent. What is your actual rent here? Rent received is 28,800. Now I'll go to this 28,800. So whichever is higher, 32,400 is the higher. Hope you understood. So higher value we should consider for your final answer. Now, what is your municipal tax paid? Only 7,200. 7,200. Your answer will be 25,200. This is all about your answer. You got net annual value for house 1 and net annual value for house 2 also. Clear? Yes, good. Now we have done with this 18,000 along with 25,200. Clear? Yes. Now I'll go for the next slide. Your net annual value is house 1 18,000, house 2 25,200 less deduction under section 24 at 30%. We'll calculate this. Your 18,000 multiplied with 30% and your 25,200 multiplied with 30%. First one will be around 5,400. Second one will calculate. So what is the calculation you have? 18,000 multiplied with 30%. It is 5,400. Similarly, this one 25,200 into 30%. So it will be how much? 7,560. So these are the standard deduction. Along with this, interest also we are supposed to minus. In the question you have earlier year, please don't take earlier year. Even though it is a current year, paid or due, both we should consider. So it will be 4,680 and 6,240. 4,680 and the second one 6,240. So minus this, less interest. So what is the answer? I'll go for this. Your 18,000 minus 5,400 minus 4,680. I got 7,920. 7,920. What about the last one? 25,200 minus 7,560 minus 6,240. I got 11,400 in this. So this is also done. This one also done. What is the answer? The final answer. House 1 and house 2. House 1 7,920. House 2 11,400. Total it will be 19,320. I'll cross check once. 7,920 plus 11,400. Yes, 19,320 I got. From 18 I have deducted. From 25 I have deducted. These are your income from house property. Taxable income from house property. I'll go back to your slides so that you can take screenshot. So this is your problem. The solution part 1 and your solution part 2. Your final answer 19,320. So this is all about your today's session. Hope you understood. So almost we are in the end of your income from house property. We'll have another 2 sessions and we'll wind up with your topic. Thank you.